So each business has a different certainty of likelihood of those revenues and profits coming in, and it varies a lot. And the other thing to keep in mind is capitalism is very brutal. Everyone's out to take everyone out. Dog eat dog. It's a very competitive landscape. Creative disruption, it's what makes our economy work. And so the only defense we have against all of these factors is to have a number of bets. So we cannot have, like Francis said, a high degree of conviction on our own. I could have never, no one could have said that Vegas would go to 0 customers for several weeks in a row. Okay. Who would have ever imagined that? Right? Who would ever imagine that, like the other day, there's an airplane that flew with 1 passenger. Okay. The things we are seeing happening in the world would not have shown up in any projection you would have made. And so the only defense you have against that, because, my friend Guy Spear, I was talking to him earlier today, he says he's come to the conclusion that 100-year events happen every 10 years and 50-year events happen every 7 years. So his perspective is there's no such thing as 100-year events happening every 100 years. And he thought once he rode out the financial crisis, 08, 09, he could safely go to his grave and he'd never see another blimp again. Okay. And now he's resigned to the fact that every 5 or 10 years, he's going to see some earth-shattering event come through, which he can't imagine. So I think the best thing that we can do is make sure we make investments where knowingly we know the odds of us making money are really high and the odds of us losing money are really, really low. That's even more important than the making money part. And make a few diversified bets. Don't buy 3 REITs and say you're diversified. Don't buy 3 casinos and say you're diversified, right? So make a few diversified bets within your circle of competence, hopefully 8 or 10 bets. Don't sweat, is it 90% or 80% or 70%? Because we don't know. We just aren't that good as humans to see in the future.
That's great. And another quick question. What will be your maximum bets, like optimal number of bets you would like to make?
I don't put more than 10% of the fund into anything.
How many bets? How many?
Ideally, it will be 10 bets.
Okay, gotcha. Okay, looks sense. Like 10 times 10, 100%. That's great.
So in your book, you mentioned making trade-offs between making Kelly formula bets and having higher exposure to volatility. Do you think that this capital allocation strategy that your fund employs is optimal for all investors, especially those of us that are young and are starting off just creating their own portfolios?
Yeah, so one of the mistakes in my book is the whole discussion on Kelly formula. So if I were to rewrite the book, I would not mention the Kelly formula. So the mistake I made in the book is that everything about the Kelly formula that I wrote is correct, except that it only works when you get to do a zillion bets. So if I'm going to do 1,000 coin tosses and I have 51% odds on heads and 49% on tails, and I keep betting heads, it's going to work out for me. Okay, but in the stock market, I don't get to do repeated bets very frequently with very well-known odds. It's really infrequent. And so this was not clear to me when I wrote the book. And so what I would suggest is if you're reading the book, just ignore the entire section on Kelly formula. Okay, so my apologies. The second thing is that I've never invested more than 10% of assets into a single stock. Usually I like a 10 by 10 kind of, 10 bets at 10%, or some bets are 5%, some bets are even 2%, just depending on conviction. But I'm never willing, and definitely with other people's money, I'm never willing to go beyond 10%. And so I think there's a lot of research that shows that, if you have a 10 or 15 stock portfolio versus a 40 stock portfolio, you don't gain much in terms of diversification by going from 15 to 40. but you're going to give up a lot of performance by doing that, because you're not going to be able to come up with 40 ideas that are all undervalued and look great.